Good morning and welcome to the Lightcast studios for this JOLTS live analysis. JOLTS standing for Job Openings Labor Turnover Survey, a Bureau of Labor Statistics monthly report that gives us some indication into the health of our economy. On this April 4th, 2023, I'm your host, Christopher Laney, and I am joined by two outstanding economists. We have senior labor economist Layla O'Kane and senior labor economist Ron Hetrick. Ron, Layla, welcome to the studios.
Thanks, Chris. Good morning.
Good morning. It's good to be here. So there's a lot that's going on right now in the news. A lot of things that people are looking at right now. JOLTS just got released. So Layla, I'm going to start with you. What is kind of your first takeaway after seeing this report?
Yeah, this was an exciting one. I think that this report really shows the soft landing that we've all been hunting for so many months. So openings came down by a substantial amount. I think just about as much as we've seen since the middle of last year, or maybe even since earlier on in the pandemic. And we did not see a layoffs shoot up, which is great for workers, and that is sort of indicative of that soft landing we've been looking for.
Ron, Layla just alluded to it, the soft landing. Is this the kind of report that the Fed has been waiting for or hoping for? What do you see? What sticks out to you in this report?
Yeah, this is definitely good news if you're saying we want to cool things off. We've been saying since, third quarter or second quarter last year, everything's going to have to unwind by companies starting by laying off openings. Before you can even think about laying off somebody, you actually have to, start to show that you're not willing to hire as many. So I think this is a really good report. I think in particular, and we'll go into that today, is where did these drops in openings occur? And that's the part that I am really encouraged by, because it happened in the sectors that we've been waiting to see. And we can dig into that a little bit more.
Yeah, I want to get into that. Before we do, Layla, one of the things that, in addition to job openings, we look at separations and quits. It didn't seem like there was a lot of movement in that area. Is that a good thing? Is that a bad thing? What are you seeing?
Yeah, I mean, I think you're right. There wasn't a ton of movement in that area. But one thing that is good that I kind of alluded to earlier is that layoffs did edge down. And so one of the things that we were looking for is, if openings come down, does that mean layoffs go up? Does that mean workers are getting laid off and out of a position? And kind of what Ron just said, that's not really what we're seeing. We're not seeing that happen. We're in fact just seeing openings come down, folks eliminating those positions that we have openings for, but not eliminating the positions they already have workers for. And so I think little change in the separations rate overall is still really a good sign for workers. This means, again, that we're able to kind of cool down the labor market slowly without harming people as much as a high rate of layoffs would have.
So let's jump a little bit on the specifics in the industry data. Ron, I'll start with you. What were you looking for before this report was released? And then now that the report's released, is it what you were expecting? Like, what do you see?
Yeah, I'm actually very excited to talk about this particular part. We've been saying that when economies overheat and people talk about, recessions or cooling off, what you're doing is you're cooling off things that looked like they were going way too strong. So if we go back to last year, the sector that was really driving a lot of our inflationary wages, the sector was really driving a lot of the intense pressure on our economy was coming from that supply chain side. So manufacturing, warehousing, companies that were trying to move goods along all the way to retail trade. And what you see is that has now unplugged. We're starting to see serious drops in job openings occurring in manufacturing, a huge drop in transportation and warehousing, which we were pretty much hoping for because we kind of had this odd jump up the prior month. But you do see this kind of going down through the line, even retail kind of easing back on their openings. So I think this is a good first sign. And there's something else in that. And that is you're starting to see what may be what we've been waiting for, which is this flow of people coming out of maybe warehousing or not finding those jobs in those warehouses like they were, and now starting to fill those jobs in hotels and restaurants. We did have a very large hiring gain in those industries last month. And if you look at where, kind of how job openings are going, they came down in hotels and restaurants. So it's kind of indicative of, I think they're filling the jobs. I don't think there's so much removing them. I think they're getting them filled. And that was reflected in the payroll data last month.
So Layla, I want to go with you talking about the industry data. Obviously, when we look at the headlines, the tech industry gets all the news, gets all the headlines around layoffs. Are you seeing the same narrative play out, what we're reading in the news, or what are you seeing in this report?
Thankfully, I'm not seeing that really play out. So the tech industry kind of lives in two main industries in this data. One is professional and business services, and one is information. Information, we just saw really little change across the board in terms of openings and quits and separations overall. But for professional and business services, we saw the narrative that actually most companies are removing openings before they're laying off people. So openings did edge down quite a bit in professional and business services, and layoffs also went down, and quits went up a little bit. And so that means that people aren't feeling sort of insecure in that industry. They're still sort of able to shuffle jobs, but openings are coming down slowly, which kind of shows that, okay, maybe it's not as booming as it was last month or a few months ago, but they're not laying off people at high rates. And again, layoffs came down overall. So we're not seeing that ricochet into other sectors of the labor market. That's something we noticed last month as well. And I just want to underscore that as much as we see in the media a lot of tech layoffs, and of course it's tough for those folks who are losing those jobs, this is not an economy-wide thing, or even from this data, a tech sector-wide thing.
So this could be a little bit similar, but Ron, the other day we were talking and I had posted a heat map that I had saw around housing market prices. And we were showing that the housing market prices on the West Coast were still dropping, but on the East Coast, they were still rising. And you made a joke that is that housing prices or is that the layoff heat map? And so what's happening in terms of this like tale of two economies? What's happening on the West Coast versus the East Coast?
Yeah, I think we are definitely seeing different stories playing out. And I think, we have seen some pretty significant population shifts occurring in the past couple of years. I live in Florida. It's been really growing. You do have a lot of businesses going up, putting help wanted signs in windows beside businesses that already have help wanted signs in windows. So, when people move to an area, it starts a chain effect. So people come in, so you build the housing, people come in, and then you need all the commercial business around it. You need all the supporting the roads and highways that go in around it. So it tends to create a lot of jobs to kind of, go alongside of the population growth that you have. And I think that's what you're seeing is partly related to that. So housing prices go down in markets where a lot of people may be losing their jobs or things are kind of shifting away from those markets. And then the markets that are intensifying, the prices kind of go up. And I think correlated to this, with the JOLTS report was we actually had think about this, we had almost 1 million decline in job openings, but we actually had a pretty significant increase in construction job openings. I actually think that's a really good sign that we could somehow cool off our economy a bit. But the one sector you do want to be driving things going forward and giving us some optimism is in construction. And we did see some hiring last month in February, and now we're seeing a commensurate, really large job gain occurring in that industry as well.
So Layla, Ron, this is for both of you. Ron, I'll start with you. Friday's the jobs report. It's going to be coming out in a couple of days. What are you looking for in that report? So Ron, starting with you.
Wow. That's a great question. I'm sitting here thinking, is this the pit? I know we've got a lot of staffing companies that are probably watching this. If you look at professional business services, a very, very significant decline. Sure, some of that probably came from tech, but I'm going to guess that the vast majority did come from temporary staffing because of the huge declines we were seeing in warehousing, the drops we were seeing in manufacturing. So I think, when I look at these things, when we see the purchasing managers index now it's been falling now for quite a long time, took another big drop. We're seeing this cooling that's going on in that sector. Now, how long will that continue? I think probably for a little while longer. So I wouldn't be surprised on Friday if we just don't manifest a lot of gains that we've been seeing. I think there's still some supporting industries, but I think you are going to continue to see that cooling off in the sectors like the good producing side of the economy.
Layla, how about you? What are you looking for in Friday's report?
Yeah, I'll be looking mostly at the unemployment rate, right? So we have openings coming down, and that means that there are fewer openings, fewer jobs for unemployed people to match with. And so you could expect the unemployment rate to potentially edge up because of that. And I think that will be a particular factor that folks will be looking out for. That being said, we did see it edge up a little bit last month when openings came down by just a touch. So it's something that I'm not sure what the sort of magnitude of that will be. And that will sort of help explain to the Fed how much more cooling they need to do as well. Right now, I think with this report, we're down to around 1.6 openings per unemployed person, which is lower than we've been in a long time. And so I think we'll see how that affects the unemployment rate.
So Layla, as we finish off here, what are your final takeaways with the JOLTS report?
Yeah, openings came down by a lot more than we've seen in quite a while. I think that finally we're feeling the effects of this cooling, and I think that this is really good news for the Fed and hopefully will kind of help stabilize other sectors of the economy as well.
Ron, how about you? Your final takeaways on this report?
Yeah, I think what's funny about all of this is we talk about things like job openings falling and everything, and we say this is great. And I think for the average person, they go, "That's great." And the answer is yes, it is, because it eases off this really unnatural pressure. You go back before the pandemic when we had about 7 million job openings, a very healthy economy, a very low unemployment rate at that time, and we've been sitting in this 10 to 11 million range. So getting down here in this 9 million range feels a lot more comfortable in easing up that kind of intense pressure. But let's not forget anything here. That's still almost 10 million job openings, which is still several million higher than we were prior to the pandemic. So yes, we are starting to cool things off, but make no mistake, this is still a very strong economy.
Ron, Layla, thank you so much for your insights in the conversation. For this analysis or more about our data, visit lightcast.io. Again, I'm Christopher Laney, and we will see you again this Friday.